obviously the big news event for the fourth quarter is this little presidential election in November. Where do you think the markets are going to head in anticipation of the big election, and then what happens depending on various outcomes after that?
Well, let's break it down a little bit. First of all, we're already getting a lot of news reports that Wall Street is advising clients on an Obama win. Mostly that's because of the polls, and if that continues, that's going to be the tone and pace of it. I'd say the first thing that we have to understand is what's going to happen with capital gains. Now, most people, whether Obama or Romney, take the House, is the White House, it's going to remain at 15%. Obama has only said that he's going to raise it to 20%, so 5%. Billionaires are going to go broke. I'm not going to be able to pay college tuition because I have to pay an extra 5% in taxes, and only if I make over $250,000, and that's adjusted gross income. Please. The world is not going to explode for wealthy individuals to pay an extra 5% in capital gains, but there is some talk about a impending doom when everybody goes to sell all their stocks. The problem, Paul, is that if everybody sells to get their cheap capital gains and save an extra 5% because they're a billionaire, what are they going to do? Sit in cash? No, they're going to be buying other things. Right. So I think the catastrophe is out. The other thing that I think that we need to remember is what's going to happen with corporate tax rates. Now, we're going to see in this debate, both Obama and Romney want to lower it. Why? Because they're smart and want to get elected. The only difference is Romney just says, let's make it 25% for everybody. Obama's very interesting, though. He said, well, let's make it 28. And by the way, 28, 25.
Clearly not that high
compared
to other parts of the world.
Absolutely. And I don't really care if corporations are not going to make or break their quarter because they had to pay 28% versus 25. Quite frankly, you lower it to 28, 25, you don't jack around with the capital gains rate, I think that you'll be fine. So I don't see any impending doom. I don't see a lot of change. The real thing people are going to realize that in November, when we know who's going to win, markets generally, statistically, will trend upward.
Right.
So I wouldn't try to time this. I wouldn't try to play anything. I would sit tight, go with your long-term plan.
Is the bigger issue for the markets going to be what the macroeconomic picture might be in 2013? Everyone's worried about whether or not Congress, as I like to call them, our least and dimmest, will avoid sending us over the fiscal cliff at the end of the year into 2013. And I think a lot of people are worried that companies are already cutting back on spending. Maybe they're using concern about taxation as an excuse, but right. I think that is what a lot of people are really nervous about, not as much the taxes from a corporate level, but what happens to all these tax cuts, the Bush-era tax cuts that could go away, and then the big spending cuts as well.
Well, here's the thing. Neither party will actually push or intends to push anybody off a fiscal cliff. It's about whose legislation is going to get passed on who's going to rule. Now listen, the Republicans, they rule the House, okay? The problem with an Obama presidency, we perceive right now, is that there'll be gridlock and we won't be able to compromise. But if you have a guy who's on his last 4 years and is working on his legacy, you better take a cue from Bill Clinton, right. And he's going to have to just get along with everybody. So I think that people need to downplay that a little bit. There will be compromises. It will happen, especially if Obama gets in there. So the real issue is that we have a slowdown. We potentially have a recession next year. I don't think it'll happen, but it's on the table with these bad manufacturing numbers, and we're using that, politicizing it, saying, well, it's because we don't know, because companies don't want to spend any money. I think the underlying truth, that's not really it. It's that we just don't have the production that we need. And if you're a CEO, wouldn't you just rather blame it on the president or Congress?
It's a lot more convenient.
It is, rather than to say, man, I don't know where I can invest $30 million and get an 8% return on invested capital.
Right.
You don't want to say that as a CEO. Just blame the government. That's my motto.